Well, gold prices are making a bit of a comeback. The precious metal up nearly $14 a day to $14.67 an ounce. And at that level, it is almost back to where it was before the big sell-off. Our next guest expects that upward trend will continue. He's Jason Toussaint, CEO of World Gold Trust Services. Mr. Toussaint, welcome. You know, gold had been on a very powerful bull market run for about a decade, well into 2011. But since then, it has been in, I think charitably you would say, a bit of a bear market. What do you think will turn that around and get gold moving up again? Why?
Sure. I think there was a little bit of a shift in demand. We look in the first quarter, a lot of investors were caught off guard with the veracity and the upward trend in domestic U.S. stock markets. So there was a bit of a rebalancing going on. However, what we have seen as a result of this price pullback is, perhaps surprising to some, the voracious appetite for physical gold investors around the world, taking advantage of that and seeing it as a buying opportunity. So if we look at the reasons why investors here and abroad have turned to gold, as you mentioned, a decade ago, they are as valid today as they were when they put those transactions on back then. So gold definitely has a role in today's portfolio construction.
In mid-April, as we mentioned, gold took a very sharp sell-off, and there was a lot of money flowing out of ETFs, including the one that you're most intimately associated with, the GLD. Who was doing that selling and why?
We think that without having perfect information, the markets are telling us that the selling that went on in the futures markets in the U.S. and some transactions out of the ETFs, including Spider Gold shares, were more short-term focused, more trading focused traders in the marketplace, not necessarily long-term investors. And I think what we're seeing here is a little bit of a disconnect between what's happening in the U.S. market, led by, as I mentioned, short-term trading, and the fundamental demand for gold around the world. We always point to India and China. They account for over half of gold demand now. And they are driven by economic expansion, albeit maybe not at the 8% and revised down to 7.7. But the reasons for buying gold are varied around the world. And you know that we see as a short-term price pullback. The
two economies that you just mentioned, China and India. India has the wedding season coming up, I suppose, and so there will be more buying associated with that. But both of those economies are not as sort of thriving right now as they had been. How important will it be for the price of gold for those economies to get kick-started again, and that driving buyers back into the metal?
Sure. Well, I think it's important to understand that gold purchases in India and China, in addition to the wedding seasons and festivals, you know, it is a fundamental asset to them. So it's not necessarily a fashion purchase or, you know, a luxury item. It is something that they buy, that they understand and have for generations, that gold is the foundation of long-term wealth creation. So despite the fact that they are slowing down somewhat, we need to understand that there is a long-term wealth creation engine here, which is creating increasing discretionary incomes and, frankly, a vastly expanding middle class. Their cultural affinity to gold, combined with the discretionary income increase, means more demand for gold from those two countries going forward.
Jason, thank you very much for being with us. Jason Toussaint is CEO of World Gold Trust Services.